Well, Governor Malhotra delivering exactly what the street expected, which is why you've seen that beautiful spike in the bank nifty, the nifty realty up and about, the rupee showing some resilience. So that's actually what the key word of this policy would be, resilience. So the 25 basis point rate cut delivered as expected, 5.25% now is the rate. A big takeaway is the sharp increase in the GDP number that the governor is penciling in and the central bank is penciling in for this financial year. That's 7.3%, up by about 0.5%. Meanwhile, inflation outlook is dropping. The inflation number for this year has dropped by 0.6%. I mean, if you think about it, this is the dream combination, right? You have high growth, low inflation coming in. And I would say, Alex, some moves, maybe not overtly, but covertly, to support the rupee as well, which is why you've seen that rupee improvement. Yeah,
for me, you've already highlighted a couple of the takeaways that I've written down as you were speaking, as Governor Malhotra was speaking. Of course, that rate cut. What stood out also is the fact that it's unanimous, and particularly from the perspective of what Dr. Nandi was telling us earlier today, is that it was not a foregone conclusion. It would have been a little close, but the room that they have on inflation has provided them with the ability to cut 25. But more importantly, what they've not said on the rupee, but what was implicit in what is being done, beyond the 1 lakh crore that is being put through OMOs, there is also going to be a 3-year dollar-rupee swap. And what this essentially means is that the RBI will step in and buy dollar and provide rupee, ostensibly to provide liquidity to the system in the way that the RBI expects that the system will need that liquidity heading into the last quarter of the year. But more importantly, you've seen a sharp move. Actually, there's a lot of fluctuation because you moved about 14 paise on the upside, appreciation, and then it's cooled off just a tad bit from that point. But importantly, a little bit of that speculation that you might see or might have seen in the rupee might go away. I wonder what Vishwanath Nair has to say about this, because that dollar-rupee swap stands out to me, maybe in a way adding a little bit of stability to the currency. But beyond that as well, Vishy, we were talking about the fact that will they, won't they? They ended up doing exactly that, cutting rates, and it was unanimous.
Yeah, so, Alex, to be fair, the swaps is something that the RBI has implemented before as well, whenever there was rupee weakness or undue rupee weakness. The OMO part, now that's the one that to me makes a bit of surprising sense, because 1 lakh crore that is coming in through that route, and that is an important liquidity provider for the economy, and it's going to happen in this month. 5 lakh crore from the dollar rupee buy-sell swap is a 3-year liquidity that is available. OMOs are more permanent, so that's a sense of money that is available to people, for banks specifically, to go out and lend and ensure that this rate cut that they've announced, this 25 basis point rate cut, cumulatively now 125 basis point cut just in 2025 by the MPC, that gets passed on to the consumers. Now, you heard the RBI governor point out that a 69 basis point reduction in the weighted average lending rate has already happened. And that is an important reduction because now you have more rate cuts to be passed on. You will have to ensure that adequate liquidity is available to the system to do that. And that's why these measures are important. What also struck me a little bit is the calculation on the GDP and the inflation front, specifically on inflation. The RBI is now coming out and saying 0.6% for Q3. That's a steep number. That means for now 2 consecutive quarters, you will see inflation undershooting that 2% bottom mark from the target. They have the tolerance band that lasts up to 2%. So for 2 consecutive quarters, you are going to see inflation coming in lower than that. We don't know what Q4 is going to look like, because this was something that was clarified during the October policy and the policy before that in August as well. But inflation has consistently undershot the RBI's estimate. So if Q4 also starts undershooting, you're going to have a peculiar situation. 3 consecutive quarters of inflation coming in below the RBI's target or the tolerance band. And that would mean that the MPC will have to write a note to the government explaining why their rate action has led to this. That will be something that they did when the inflation was breaching the 4% and 6% mark later. And now on the reverse side as well, they'll have to go out to the government and explain themselves.